Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, February 3rd, 2023. It is 10:34 a.m. Eastern Time, so about an hour into the trading day. And here's what I'll go over. I'll do an update on the equity markets, including the VIX Volatility Index, quick updates on gold, silver, and GDX. I got a post out to you this morning on both the markets and that so far. Obviously, we'll look at the euro. And then I want to just do updates on some of the recently highlighted commodities trade ideas. And that includes wheat, crude, natural gas. Crude's more of something I'm watching now than trading, but wheat, crude, nat gas, lumber, coffee, and lean hogs. Alrighty, a lot there, so let's dive right into it. So this is that 15-minute chart I shared yesterday, and I can't recall if I give you a screenshot or covered it in the video, but we had this 15-minute divergent high, the big run up yesterday, and I had us going down to two targets here. The trend line, but first hitting this support zone. The support zone runs is covered yesterday from 12,554 down to about 12,500. Hit that bottom part of the zone to the button. Even had a little divergence there when we hit it, and that's where we were this morning. So, and I got a post out to you, but with the 60-minute chart showing that level there. So we hit it. There's the reaction. Give you my thoughts. Not a reaction I cared to game. In hindsight, I would have gladly taken that. But we'll see where we close the day. We're still down in the NASDAQ, but there's some things I'll tell you. They're buying Apple hard today, and I'm going to talk on that in 1 second. So as of now, I still favor, that's a typical reaction on the initial tag of support. It's carrying a little high, a little aggressive for what I wanted to see, but not concerned right now. I'm still holding the shorts and actually used, as I said, I didn't care to cover there. Again, hindsight would have been nice, but I am using this bounce to short into because I still believe we're going to fade and close the day red. We're pushing close to break even now on the Nasdaq and the S&P. Small caps are about flat, so I think this is the time. And again, yesterday was a good short. Here's a good short. And then if we take it much more, we'll see how we close the day. I'm kind of playing this one minute by minute, trying to read the charts. And like I said, the strength in Apple more so than anything has given me a little pause today. But we'll get to that in 1 second. So here it is. If we run back down to it, we've already had a reaction there, so we should take it out. And then the target would be the trend line, which you can also see that's the 60-minute chart. What it looks like. We were just on a 15. That's the first support level right there. There's the typical reaction, and then this is where I think we go. And then of course if we break this, that's even more powerful. Let's just jump out to the daily charts. Look at the Nasdaq itself. So yesterday we pretty much hit the top of the bounce target zone. We're still make no mistake about it. We are still, or the index, the NASDAQ, and just about all the major indexes are still very comfortably above their downtrend lines in 200 days. So it is, right now, the ball is squarely in the bears' courts to take this down and foil that breakout. And they haven't done it yet. So, again, can't make the case for anything aggressive on the short side. Long side, like I said, we're just too stretched to have an attractive RR. I think at best, if we close the day green next week, we'll probably see some selling, some profit taking back to the trend line. Or again, best case scenario for a while, we'll start to stall out and maybe grind around a little bit. You're getting, again, this is a pretty extreme overbought reading. Usually the markets don't stay this overbought, and if it's a bear market, then that is going to be next week's going to be really ugly in my opinion. Once everything corrects. So again, the ugly part comes, the heavy short. Once all these levels fail, once we take back, if we, the bulls have no reason at all to lose the 200 days and the trend lines and everything at this point. So that's a lot of work to be done. That's not going to happen today. In fact, it may not happen for a while. The way they're bidding up the market right now. Let's take a look at some of those market leaders. Let me just flip to another board, make sure I'm not missing anything. And that's still although that was the most likely bounce target zone of red, this still remains the, quite possible bear market, still bear market rally if they take it up there. One of the things about what's going on lately is, I've traded bear markets in the past. All the way back to the 2000s. I was more of an investor. I was a financial advisor back then, and not really shorting a whole lot. But lived through that and know how, remember how that one works. And the one thing about, we haven't had that real capitulation leg down, which is a signature of most true bear markets. That doesn't guarantee that this wasn't the end of the bear market right there in October. It most certainly doesn't guarantee it, but it's just would be atypical. And one of my favorite movies, one of the best movies in decades, in my opinion, was The Usual Suspects. I'm sure most of you have seen that. And there was a line in there where Verbal, he's being interviewed by the detective, and talking about Kaiser Soze, the big bad guy that nobody knows who he is or what it's about. And there's a line where he says, the greatest trick the devil ever pulled was convincing the world that he did not exist. And, in a bear market, again, I've been to this point where you have to convince the masses. You will never get that washout type move until you blow out a lot of the short interest and blow out a lot of the bearish sentiment and convince. You have to have, convince the markets the bear market is over, the majority, the masses. And that usually then opens the door for a swift move down. So I can tell you that, based on what's happened recently, this rally, and then, how we're holding on to, they're buying up Apple pretty hard today. That's textbook to me. Now, again, it's kind of a working theory. It's what, where I think we could go, to come up. And again, I talked about it before. We had a perfect tag all along. We've had perfect tags, these downtrend lines in 200s. And I told you I kind of suspected they might want to pop them this time based on the price action and the fact that it's almost too easy. When something becomes obvious to the masses, when you 30 days into trading and learning technical analysis, and you can spot that downtrend line and pick up on a clear pattern, everyone sees it. That's usually about when it stops working. So just again, what they usually do at that point is they'll go up and pop it. And again, clear stops on shorts, suck in some new longs, some fresh money, and convinced now it could be the other way around. But again, I've done this long enough to tell you this breakout is getting very long in the tooth. So I am comfortable holding my shorts no matter what happens today. The shorts I took yesterday, I told you, decided I'll go ahead and add back some swing short exposure, and I just added a little more, and I'll hold that into next week no matter what happens today. We'll see from there. And then if we start popping up there much above, we continue to build on the gains, I'll share my thoughts whether it's time to get out or not, scale back out, or just pull a hard stop and take my lumps and move on. But anyways, that's that red candle. Remember, we're right here. We've recouped a lot of it. Let me talk about the market leaders real quick because I have a lot to cover in this video. So there's Apple. Look at that big green candle, and look at what the volume. Look at what they're doing with Apple. That's massive volume. See, this is all today right here. I'm using a 5-minute chart. That's post earnings. If you put on what happened last night. Yeah, I didn't listen to the conference call, but I do watch what's going on there. And here we can turn on the after hours trades by doing this pre-post data, show last 2 sessions. And so they sold it down initially on the earnings. The dip buyers, they gobbled it up. Then the call went down. And so even last night, again, this is why I say you kind of just wait to see what the big boys do, because the starters step onto the field at 9:30 a.m. Eastern time. That's when they have the liquidity to move in the market. And right now, you cannot knock it. And again, Apple's a market leader. That's why I'm spending so much time on this one. The rest matter, and all the other big things were down today, and then they started to follow suit when they saw this heavy buying. That's huge volume on Apple. So right now, nothing but bullish. And look, they're just skyrocketing away from those 200-day moving averages. So again, I'm certainly less bearish on those swing short positions than I was yesterday. Enough to take another shot, but I'm still relatively small, and that's all I'll be until I see some kind of big reversal here. There is a previous reaction high Apple's at right now, and again, to say that it's overbought would be an understatement. The RSI on the daily here is at 76 right now. The last time we were at the same level, in fact, I had a line there. Looks like I didn't have to color it up. Why is it not showing? Oh, I know why it's not showing. It's just out of range. And that is, let me put it right where we were. See, that's That's the most overbought Apple got in years, and that marked a high in Apple and the high. So what happens is, here's the thing: when something just feels so bullish like this, like it could never go down and will never stop again, that's usually when the top is in. And you can see back then, and that was our sell signal. We were monitoring that uptrend line. We were monitoring these overbought conditions, 60-minute divergences. And then just when you thought Apple would never ever stop going up, it started going down, and it didn't stop going down until after all said and done, whatever that drop was, 20-30%. So that's the nature of the game. Up, 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 up. It feels like nothing but bullish. Volume's good. They're buying it, and then all of a sudden one day it just stops and goes down. And you can see Apple kind of, when you look at it this way, it's pulling the old natural gas and lumber futures that hard up, hard down. There's been here's some consolidation at this point, but for the most part it's been full throttle up, full throttle down. So all I'm trying to say, don't be fooled by this. This is still post-earning stuff. Maybe there's still a lot of shorts in there. Maybe they said something on the call the market loved. Technically, again, you gotta get smacked down back below those 200s to really, and this trend line, to really get very bearish on Apple and the market. And so that's what I'll be watching for next week. Just wanted to point that out. Again, massive volume coming in. The rest of the fangs are down, and then technically speaking, let me see if I have the clean boards. Yeah, the clean boards. So far, there it is. I won't call that a rejection, but I'll call that a reaction at the primary BOD trend line on Microsoft right there. Just to go back to Apple. I'm going off on a tangent here. Remember, on Apple, well, we're going to close the week, barring some crazy reversal that I don't suspect today. It would take a heck of a reversal to get us back on the 200s, but these are the 40-week. We've been below it, and now this is again nothing but bullish for Apple. And an extent, to be bullish for Apple is to be bullish for the market, as long as that holds right there, the breakout back, the recovery back above the 200-day / 40-week moving averages. Wanted to point that out. Longer term too, on the monthly chart, looking like we're about to get back above. We've been flirting with the 20-month moving average, but we're still in very close proximity, so I'm not going to try to take anything away from there. Plus, it's February 3rd. We have a whole month to go here, at least three plus weeks before the monthly candles finalize. So, all right, back to the rest of them, and I'll move on since I wanted to cover a lot of stuff. So, Microsoft at trendline resistance, above the 200s, but at down trendline resistance. Alphabet just below, would have hit it in after hours, I believe. The BOD, or benefit of the doubt, trend line right there. And now right back around the 200 days. Remember this red candle, we're up at the top of it right now. That's as low as we went. So for all intents and purposes, Alphabet is still testing. And remember, this was one of there were a couple of the big market leaders that had only checked the 200s once. It had a test of the 200-day right here, the exponential, and this is only really, since the top was in and they clearly gave them up back here, this is only the second test. So I wouldn't be surprised to see a rejection here, and again, overbought. And so I like the odds. I think it's, I'm not a big options guy, but I'll tell you, it'd be a good time if you were, had a portfolio, you weren't a big short seller, but you were comfortable with options, sell covered calls on your longs to generate some income, because at most I think it's going to be tough sledding going forward. Think about it. We've gone up. The Nasdaq is up like from yesterday's highs 20% almost, I think, this month to date. And we have 27 right here in Alphabet. That's a lot of energy spent getting it up to that level. So I just wanted to point out resistance. Here, I'll go through the rest. Amazon, 200-day. This is another one that got way below and rallied up and then smacked hard right into the intersecting 200 days yesterday. So at resistance, you have another trend line up here, a little higher, but so far a rejection off the 200 days. So remember, Apple isn't the market. It is the top component, but when you look collectively at the rest of these, there's the other share class in Alphabet, GOG, again, right on the 200 days. Tesla coming up, and here's another one that got so far below the 200s, hadn't even tested them yet. So we could see a little more upside there, but Tesla's also at, as I pointed out, very big price resistance there at about 200, 205, more of a zone. Let me give you a zone here, because you can see these reaction highs once you broke it, and that reaction low right there. So we're right at the bottom there. So I like being short here, because I think at best Those shorts may just grind around for another week or two while the market digests these gains. At worst, for me that is, and at best a quick, pretty sharp, hard pullback, and still quite possibly, based on all my other analysis and both fundamental and technical, maybe at the tail end of a bear market rally, the type you need that convinces the masses that the bear market's over, and when it's not. And if that is it, I talk about paradigm shifts and rapid, positioning in the market. The one thing I'll say, and I've said this over the years, never, ever, ever underestimate how fast sentiment can change on a dime. The news flow will change. Right now the sentiment, the momentum, everything is bullish, and so it's very counter trend to be shorting here, but not. It's my style. I short rallies into resistance, right? That's and I buy pullbacks to support. I buy divergent lows. I buy breakouts above resistance, and then sell rallies into resistance if I think that resistance is going to cap that rally, especially with a pullback. And there's Tesla. Tesla's gotten pretty far away from this uptrend line that started here, and so even just to pull back, even if I want to play the bullish game, which maybe that might be the camp I swing over too soon, then Tesla, to get back to that trend line, I'm gonna have to measure it. I can't. I'll have to grab that. I'm just gonna grab lower so I don't move that other trend line. Just to pull back to that trend line would be, depending if and when it got there, a good 12%. And that would still be, potential bullish scenario. Get up ahead of yourself, pull back, check the trend line, and then run up. So yeah, I like going short into next week, and I'll tell you that's almost certainly right now what I'll be doing at the end of the day. But again, do what you are comfortable with. Don't follow me. This is not a follow me site. All right, that's it. No, NVIDIA, like I said, semis. A lot of semis coming right up to big resistance. NVIDIA has a uptrend line. It's very well above the 200 days. Sometimes you take them out by quite a bit and then give them up, and sometimes you get rejected right around them. But either way, you have overbought conditions in what still is, by most metrics, a bear market. Remember, I have not modified or changed these targets. The only target that I'm kind of I'm going to put a question mark by it, because I told you last time that I covered this long-term weekly chart. In the beginning of the bear market, I laid out these targets. I gave you for T4 was really, it's right here and or that uptrend line, because you see I all along I expect this to be a very long drawn out bear market. So when you go like this, extend that trend line, it's going to come in. If this is a multi-year, 3, 4, 5, 7-year secular bear market, like I think it's going to be, it may take a long time for NVIDIA to get down there. But as of now, like I said, I think on the last update I told you, T3 is where, let's just call that at this point in time, my final target. So, the way this has played out so far has been textbook. Now, I can be wrong going forward, but we hit T1, my first target, and we hit T2, and at T2 you had had a divergent line, but maybe we slightly took out the RSI divergence. I know we took it out a little bit there, but we bounced. That was also a time where a lot of things were hitting support, including the markets, and NVIDIA has bounced. One thing I'll give it points for, it's taken out the downtrend line, but again, those aren't everything, and the 200 days are not everything. They are, certainly you can see we got rejected there in a perfect tag of the downtrend the first time. Then we powered through and we took it out. However, what happens in a downtrend on any security is, as long as you're making lower highs, which we so far are, and lower lows, you're in a downtrend. And then over time, the trend lines often change. And so maybe you come in and, it's a larger bear market. You come all the way up here, and then you go down to T3, and then you still have a larger downtrend. So I just wanted to say that I can't tell you with the highest degree of confidence, but everything, the fact that calling, laying out these targets and calling for that drop for NVIDIA back there, the fact that we broke down, back tested, went on, hit my second target bounce, that all fits with what I'm seeing here. And that's very large divergence. And last time we had comparable divergence, the stock fell 56%. Well, this time I know it fell at least that much. It was about 60 something. But this is a more of a larger. These were your bigger corrections back here, 90%, 86, and this is just a long-term uptrend line that the stock hasn't visited in a long time. It has a lot of reactions, and so I still think, again, it's not going to get there anytime soon. But it could be there in a year or two if this morphs into one of those long, prolonged, ugly bear markets like back in the late 60s, early 70s, something along those lines, or really more along the lines of the Japan lost decade, which was really 2 lost decades. And you can Google search and see what the Nikkei did during that period. Okay, enough on that. NVIDIA is just one, but it is the big dog now. It's the old Intel. Intel's no longer the leader. NVIDIA is the biggest tech out there. Taiwan Semi right behind it. And I covered this yesterday. SOX Semiconductor sector ETF. I have different boards, but at resistance with some divergence. And so the semis look ripe for a pullback too. So, you have inverse ones you can trade. That's SOXS. Is a 3-time bearish. You can also short SMH instead of SOXX or XSD. There's just a bunch of them out there, and they're all just hold a different basket of semis. Okay, moving on. Let's get off that. Let's just talk about Mr. VIX for a second, the volatility index. So far, holding that uptrend line support right there. Had a little intraday spike, but that kept us within the wedge pattern, and there it is. Bullish falling wedge pattern, no buy signal yet, nor are you likely to get it until the market reverses, but pop that. If we do come down pretty hard next week, like I suspect we will, this should break out. And of course, that's a trade idea in itself. Just be careful with those VIX tracking ETNs. Some couple of them blew up a few years back when the VIX had a big move. They just weren't prepared for it. An ETN, the difference of an ETN and an ETF. An ETN is an IOU. It's really a banknote, bank, whatever company's issuing it. They're tracking, they have derivatives like an ETF, but they don't actually hold the basket of securities. They're using derivatives. And then if it goes bust, and you got to read the fine print, then hey, you're SOL. So there's more risks in ETNs than ETFs. And unfortunately, ETNs we'll get to those in a minute, just about your only way to trade a lot of the, not all, but a lot of the agricultural commodities. Those are ETNs. And again, you can trade futures, but or options, but there's not a lot of not a lot of ETFs out there in the agricultural sphere. What else? Gold, silver, GLD. Have to examine this chart really closely to see if we broke the uptrend line. I'm just kidding. Remember, we broke it yesterday. I pointed that out in the videos or in the comment sections or whatever quite a bit. We took out both that 178.39 support I wanted to see taken out, as well as a trend line, a solid red close. That gave you a clear sell signal on gold, and then a gap down today and hit that first target there, first support 174.74, where it's been trading since and probably will for the rest of the day. That's a pretty big move and one of the biggest drops in gold in a long time. So probably more downside to come, whether we bounce first or not. And if we do, then any rally back, try to backfill the gap. Of course, I was also showing you the GC gold futures chart. I got that out to you this morning, so you already saw that one. I'm just going to try to find it and show you we're still at that first second target, really, second support level. Trying to find it here. Here we go. GC. Actually, yeah, we're still on it. That's it. So there's the trend line. Somebody commented yesterday in the comment section. I replied to, they were using, it looked like a Thinkorswim chart from TD Ameritrade. I use Thinkorswim. I'm running it on the same monitor on a different side, but these are different charts, and they just had a different reaction low there. His line came in on, caught that, and mine was there. Either way, I called that a whipsaw, but then the real deal breakdown, and then boom, we broke the 1914 support right down to the next target there at 1888.60, And so far, there's really been no bounce. It's a reaction. I define a reaction as either a consolidation or a pause when you hit a level, or a bounce. Now we could bounce, and again, if we do, that's why I do these videos. There's your, if you missed it, bounce back to 1914 or close enough to it. Would be an objective short entry, and that should take us down to this next target. At this point in time, that's my final target. I remain longer term bullish in gold and silver and the miners, but like I said, looking for a correction here, and I think that's, at least at this point in time. I'll let you know next week if anything changes. If it gets ugly, you've got some really good support down here at about 1795, and I could certainly see that stretched as we are. Let me cover GDX. So you're always going to get more bang for your buck trading the miners. So when gold goes down 2%, GDX will go down 2% plus whatever. In this case, they're down 3% today. Still above the first target, but really hovering right there. I had a support level, which was actually the former T2 that was on the way up. And there's still T4, still longer term bullish, looking for that move up there. Just playing, this is play trends, that's the trend. A little correction, come down, probably hit at least here, or possibly down to T2, and that's what I'm looking at for the miners. Lots of bearish divergences, bearish rising wedge, trendline break. I already went over all the individual components for you recently, so no reason to revisit that. It's playing out as it should. EUR, USD. Euro's got the rising wedge too. Remember, this is the euro US dollar pair, which is the euro against the dollar. Gold and the dollar have an inverse correlation, which means gold and the euro have a positive correlation, which means euro up, gold down, and then euro down, as I suspect here, to this trend line right there. Max target. This is where, if and when we get here, I'll be interested in covering any and all remaining shorts on the precious metals and going long, if the charts tell me to. So it's not as simple as that. That's what the current plan is, but we'll look at the price action, the charts of all the miners, the charts of the metals, of course. We'll look at 60-minute charts. So I'd like to see some divergences if possible. Not always necessary, but those are the things I'm looking for. So, but based on the divergence, I think we're looking at a pretty healthy correction here in the euro, which is also means a rally in the dollar. And there's my dollar index, USDOLR on TC2000, or if you have freestockcharts.com, that's the same company. That's it. You have bullish falling wedge at support and a breakout today. You are coming up on a potential back test of that trend line, but I think we'll get a little more upside there in the dollar, because that's a pretty nice breakout. Positive divergences, everything you want to see, so that supports the case for more downside in gold and silver, despite any bounces from current levels. All right, a couple commodities I told you I'd cover. Updates on wheat. Here's wheat. And we could play around with this trend line if we want. This is the ETN. It tracks wheat, so my preference, I trade the futures often. But I'll actually have other accounts too that I'll buy these in that I don't have futures, IRAs and things like that. So either way, even if I pull that up there, I can really stretch it here, and you're just starting to break out. This is where I think the best fit is. And then of course I have wheat futures, CW, and that's the trend line on this is a 6-month chart with 2-hour candlesticks, and that's my preferred trend line. And so that one already broke out. It's been walking its way up. Next target still remains 799 3/4, but this is also I made the case that I believe commodities are in a bull market, and this was a nice bull market correction, and would not be surprised in the coming months to even years to see wheat go on to make new highs. Remember, this is where it was back in the last when the last bull market ended and the last bear market started. So we are in the hottest inflationary environment since the 70s. So what was that, 50 years? And to think that commodities can't just get back to where they were in a uber low, one of the lowest inflationary environments in decades, I think that's very reasonable. Now, this is of course the ETN doesn't track perfect. But I'll continue to do updates. I have wheat futures continuous contract on a long-term chart on another platform. I didn't have it queued up for this video. I just wanted to say that. Looks good. Crude oil. Let's talk crude real quick. USO still above the uptrend line. This is what I call the bane of Powell, or really in commodities as a whole. I like DJP as a broad-based commodity ETF, and it's just holding, holding, holding. Commodity prices. This is the whole reason for the stock market rally, the abatement of inflationary forces here. But we're really holding big support, and again, I maintain that we are most likely, when I jump to this weekly chart, this was the end of the last bull market in commodities back in early '08. We had a pretty hefty bear market that ended when COVID hit, and we are in what appears to be early stage bull market action. If we take out this current support, that's what I just showed you on the daily, have even better support here on the weekly, about 3180. Really, really good support. And so to me, it's a matter of, and if I'm wrong, then I'm wrong, then I'll have to readjust. But either we bounce here, resume the uptrend soon, or we go down a little more and do that. When this happens, the stock market ain't going to like it, because Powell and the other central banks are going to be forced to continue, raising rates. So that's what I'm looking at there. And again, it's a way to diversify. They're not going anywhere right now. They're kind of grinding around sideways. You don't collect dividends on commodities, so you just have to be patient. You can wait for a breakout above this downtrend line right there. Wait for a break above the recent trading range, and or both. This is how I buy. Scaling back in, buy a breakout of the trend line, buy a breakout of the range, buy a breakout above that previous high. But at that point, probably have a full lot of, commodities and not really need to add at that point if it gets up there. And it's just these positive divergences that say that whether we reverse here or we come on down, there's that $31 support I just showed you on the weekly, that, and that's minimal downside. So, you could have a full position here and you only have a 4% downside to that level. So your stop loss wouldn't be, too far below that. Oh yeah, crude oil. I want to show you also the 60-minute chart. Let's go there. Where's my CL, crude futures? Here we go. The other day I showed you I had a trend line right here, and we took that out. But what I noticed since then, see that reaction low? I had excluded that little spike. So now I drew a BOD, or benefit of the doubt trend line, that comes in right here, and positive divergence. So this says we could get a nice up in oil here, and you can see this is a massive, let me set an alert right there, that's a massive resistance level, about 8280. I'm gonna color it up so I don't forget it. Change that, make it yellow, it stands out, and also set an alert on it. Attach alert outside of trading hours, regular trading hours. Boom, because that's, you can see that's capped 1, 2, 3, 4, all these levels I'm showing you here. And so if we work our way back, it's also a near-term swing target. You can trade the range, but you can see we're also working our way up in what appears to be a ascending triangle pattern. So again, now if crude breaks that, yeah, well, you have a previous low there, but as of now, we're holding trendline support. We just put in a divergent low. So if we get this next week, or in the coming weeks, that's probably going to put the brakes on the stock market rally. And quick update on UNG. It's just tick tock, tick tock. It's riding this trend line like I've never seen. Just riding it, waiting for that breakout. We got Arctic air blasting parts of the country now. I don't know how fast it takes the utilities to switch over from coal to natural gas or whatever they were burning. A lot of the power plants can, change fuels. But with natural gas at levels that it hasn't seen, and at least on UNG, look at that, we're coming up that previous all-time low right there. Remember, UNG's an ETN that's rolling futures. You're going to have decay over time. This is not a buy and hold vehicle; it's a trade vehicle. So it doesn't reflect the actual price of natural gas. Over time, you will, hold it long enough, you will lose money. But as a trading vehicle, it does a pretty good job. So if we get a pop, I mean, at minimum, that's 1181, and that would be once we pop the trend line, we just need a solid break, or especially daily close above about 43% run up to the 1180 level right there. So waiting for that buy signal. And then coffee, KC, or JO is the ETN. Pulled back to this trend line right here today. Let's see, it looks like it's just cracking under it. but we have some price support right there, and right there, that's previous reaction high, price support. But more so, you want to track, even if you don't trade futures, track them, because that's the real thing, and that's what professionals are trading, and um, and it's what the ETNs are using to track coffee prices. So there it is. That's support, really good support there. And we got a we got a lot ahead of ourselves. We're very overbought here. Here's the 70 level on the RSI to show you how overbought we were. And look at that. We were pinned at like 90. Nothing goes up forever. So a little pullback here. If it wants to pull back a little more, that's fine, but it still looks constructive to me. And, like I said, coffee, from my experience, there are times where it goes in a trading range, but when it wants to run, it can really run. The trends can be very powerful and strong. And remember, the basis for this, we're coming off that positive divergence or divergent low right there. So, I think we'll continue up on coffee, still like that. And again, it's one of many things. It either pans out or it doesn't. Trading, just like investing, it's all about diversification, and that means don't just have 5, 10 stocks in your portfolio. If they're all tech stocks, you're going to get clocked when tech corrects because they're all going to go down. You want different securities and different asset classes, such as commodities, bonds, stocks, and then of course within stocks there's all different sectors. And then last but not least, little piggies. I told you a couple weeks back, like in the lean hogs, and give you an update there. We had a couple false or failed attempts, actually more so, to break above that 87.42 level I told you. See, these were 60-minute candles, none of which closed. You just had these little spikes, and that remains resistance, and that remains the next buy point when we take that out, and these remain my targets. So no change there. The only change since the last time I got this chart, covered it, was we've set up now this wedge. The divergence has grown even larger. Since we got rejected there, we've cut out, made a marginal new low, but we've rallied off that low and put in positive divergence. So I'm still calling hogs up to at least 91, 94 or so, and then 95, 585, and possibly, if we can get some traction, all the way up here at about 104. You have a lot of some nice previous highs up around that level. Okay, that's it. That's what I wanted to cover. And now I sit back. Let's see how they finish the day. They're gobbling up Apple right now, and because of that, then that caused them to start gobbling up the other tech stocks. But again, a lot of them are still at resistance, including but not limited to Apple here, which just got rejected since I started the video off that 157.49 previous reaction high, plus some other reactions along there. So let's see how we close the day. If my suspicions are right, we'll probably dump into the close today. That's Apple. I don't know how hard. I think that'll dump too. But I think we'll dump. We'll start to see some profit taken by the end of the day, I suspect, and then more downside next week. All right, this has been Randy Finney with Right Side of the Chart.